crazy volatility in the stock market over the past couple of days. Exactly a week ago, I wrote an article about how I was raising cash in my own trading account and preparing for more volatility. Obviously, I didn't expect to see such dramatic volatility less than a week from when I wrote that article, but I was expecting an increase in volatility and a general change in character for the markets as they continued into 2018. Basically, the stock market for over a year had risen with very low volatility, had risen for 13 months in a row, and especially had a first month of the year with almost no volatility and going straight up. So the market was very vulnerable to a correction as February started. But I think this pullback has taken almost everybody off guard. And if you go to my website at nextbigtrade.com, you can kind of see some of the reasons I discussed for preparing for increased volatility. But when I was surveying a lot of the stocks across the market, I wasn't really seeing any leadership sectors. And whenever I see that, it makes me leery that the market could be due for a correction. And on top of that, we were so overbought and coming off a very low volatility period that, a lot of these factors kind of came together to produce what we've seen over the last couple of days. Now, looking at the S&P 500, you can see that we haven't retested the 30-week moving average since the election in 2016, and this is really very abnormal price action. Typically, in a normal year in the stock market, in a bull market year, you'll see 2 to 3 major pullbacks where the price action will dip to the 30-week moving average and sometimes even down to the 50-week moving average before bouncing and resuming the uptrend. And sometimes these consolidations can last for weeks to months at a time. And since 2017 was a very uncharacteristic low volatility year, we saw the price action continue above the moving average for the entire year. And then obviously we've seen the last 2 weeks now, including the huge down day today on Monday, the 5th of February, 2 big red candles now. And it's pretty much a slam dunk that we're going to retest the 30-week moving average finally, and I wouldn't be surprised to even see the price action eventually retest the 50-week moving average, which is, a longer term moving average. And I've highlighted a couple areas on the chart of kind of like the last 2 price consolidations in 2017, and the S&P futures for tomorrow are still projected to move lower on Tuesday, so I could definitely see some type of, support in the 2600 to 2550 area. And then again, if this kind of choppy sideways consolidation moves further, maybe eventually we get down to the 2500 area where there's even kind of more support around there. Now, looking at the Dow Jones, the Dow is the most overbought compared to its 30-week moving average since 1999. So about 20 years of price action, and we hadn't seen the Dow get that overbought, in all that period of time. And again, this was after a very low volatility move in 2017. So it's really no surprise at all that what's going on. I think it's more of a surprise to people that don't follow charts and that don't always expect the market to do the same thing, when in reality the market kind of morphs into different types of phases over time. And if you look at the VIX, you can see that the spike above 35 today, this is really the first time since 2011 where we've really gotten except for a brief blip in 2015, we've gotten above kind of that level. And again, you can see 2017, the low volatility. The price above the moving average actually is higher than it was even in 2008 because the volatility kept going up in 2008 and then coming back down. So this has been a really quick spike in volatility over the last couple of days, and I wouldn't be surprised to see if we get another plunge tomorrow, maybe a flame out in volatility as we kind of finally get a really solid fear spike to put at least a short-term bottom in the market. Now moving to the stage analysis buying process and where you want to buy in a stage 2 advance. Again, one of the reasons why I thought the market was vulnerable last week was the fact that I saw hardly any stocks breaking out into new stage 2 advances. And when you don't see a sector leading the market, it's really not a good sign because there has to be some type of sector in the market that's kind of pushing things higher and where money is flowing. But this is really where you want to do, like, the ideal time to buy in stage analysis is on the breakout of a stage 1 basing pattern when you see an increase in volume, or if you get a retest of that breakout is a second low risk time to buy. And the reason why it's a great low risk time to buy is because you use the support here as your risk line and the 30-week moving average. And if the price happens to dip back below that, then you stop out of your trade and you look for other opportunities. But if the price action happens to keep moving higher, you've got low risk down to your stop line and potential high reward if you get in early, obviously, in a new uptrend. So today on Twitter, I talked about, and I did some buying in the cannabis stocks today on the big plunge this morning. And really, the cannabis stocks, I wrote an article about them last November at nextbigtrade.com, and really they contributed to a lot of my profits at the end of last year. And you can see how they broke out of over a year-long basing formation on a huge increase in volume in November last year. This is Aurora Cannabis, and proceeded to basically this stock went up 4 times before the pullback over the last few weeks. And what I like about where the price action is now in these stocks is it's still above the 30-week moving average, but now we can use the 30-week moving average as a risk line again, and we're also coming into a little bit of support from the previous consolidation a few months ago. So again, trading is all about risk reward and getting into a position at a buy point where you can lose a little to be wrong, but potentially make a lot if the uptrend continues. And typically on a breakout as explosive as something that we see here, the first retest of the moving average in general does not tend to be the last retest of the moving average as the uptrend continues. So again, I consider these cannabis stocks to be at a great buy point again. I wouldn't be surprised to see them move a little bit lower tomorrow if we do see pressure in the overall market, especially if we see a big swoosh down. But they're still, at a great buy point. And really how they reacted today was a great tell to me to how they would respond in a stronger market, because a lot of these stocks were up 10 to 20% before the late day plunge in the market. So as the market rebounded into midday today, a lot of these stocks had a big swoosh down, but they just ramped way up, and they didn't sell off again until later in the day. And this stock actually still closed positive on the day. So that's a lot better than a lot of stocks that are getting hit pretty hard. The same thing goes for a stock like Cannabis Growth, where this is another stock that I purchased today, and I'll be doing more buying in over the next few days if we get another good buying opportunity. Same type of thing where it broke out on huge volume and is now retesting the former consolidation area and using the 30-week moving average as potential support. Obviously, tomorrow, if we do get a big swoosh down, I'm going to be looking at other stocks that I've had on my radar over the past few months. Team is a stock that I've mentioned on my website, and you can see how tight the price action has been and how it's still consolidating above the 30-week moving average, and the downside volume is extremely low compared to a lot of other stocks that are selling off hard. These are all good signs for a stock that's holding up well in a very heavy market. And these type of stocks you can see them kind of trade in a tight, pattern. And then when the overall pressure on the market goes away, a lot of times these stocks will continue to move higher. Now, obviously, again, if we get a big move down tomorrow, maybe you'll see team retest the moving average, but I'll probably be putting some stink bids in to stocks like this tomorrow to see if I can scoop up some shares at a good risk reward level where I can, spend a little to be wrong, but potentially, risk a little to make a lot of money if the uptrend continues.